Welcome to the accounting class. In this section, you're going to learn about the role of the sales ledger. We have been recording our credit sales by using two accounts in the general ledger. The credit went to the sales account and the debit was to accounts receivable. All the entries in accounts receivable relate to debtors. The balance in this account at any one time shows the amount owed to the business by all the debtors. You will have realised by now that a business may have hundreds or even thousands of credit customers. There is a need to keep track of each individual debtor. Each individual debtor, that is, each credit customer, needs to have a separate account. The account will be used to record any sales returns, payments and discounts for the customer. The summary of all these accounts will be the record in the accounts receivable account of the general ledger. So, how will this work? Let's work through an example. We're going to use both a sales ledger and a general ledger. You might note that the sales ledger is in some texts referred to as an accounts receivable ledger, but in this little video we're going to call it a sales ledger. The sales ledger is going to contain an account for each customer. The general ledger will contain the accounts for assets, liabilities, equity, revenues and expenses. Midwest Farming sells agricultural machinery. Most of their customers are credit customers, so they become debtors as soon as they buy their machinery from Midwest Farming. Sally Owens buys a tractor for $48,000 on credit. The details of the transaction will need to be recorded into the accounts. A record of the transaction will also need to be recorded in Sally's account in the sales ledger. The account for Sally in the sales ledger will record a debit to indicate that she owes Midwest Farming $48,000. In the general ledger, we still need to follow the rule for double entry accounting, so there will be debits and credits which will need to balance for the transaction. In accounts receivable, we record the $48,000 that is owed to the business, whilst in the sales account we are going to record the $48,000 credit that shows the increase in revenues from sales. We should look at a second transaction and make sure that we really do understand what we are doing here. Sam Law buys a cultivator on credit for $1,200. What happens in the ledgers? Sam's account in the sales ledger will record that he owes the business $1,200. In the general ledger, there will be a double entry. A debit of $1,200 is made to accounts receivable. A credit of $1,200 is made to the sales account. You know, it's really a breeze, isn't it? So easy. Right, that takes care of the credit sales entries. Now, what happens when a payment is made? Sally pays a cheque of $48,000 for her tractor. The $48,000 reduces what she owes. So we make an entry which is a credit of $48,000 to the sales ledger account. As we can see, the account now has a zero balance, which indicates that Sally no longer owes Midwest Farming any money. The double entry will be to accounts in the general ledger. The $48,000 will be a credit to accounts receivable, since it has reduced the amount that is owed to Midwest Farming. You will probably already realise that the entries to the sales ledger account and to accounts receivable are on the same side. This should reinforce the idea that the amounts owed by all the debtors will be shown by the balance in accounts receivable. Midwest Farming has received cash, so a debit of $48,000 is made to the bank account. The result of the double entry is that the asset of accounts receivable has been reduced, while the asset of bank has been increased. What happens if an item is returned? How are the entries made to the sales ledger? Sam returns a cultivator and receives a credit memorandum for $1,200. Let's look at the entries here. We make a credit entry to Sam's account in the sales ledger. The credit entry reduces the amount Sam owes to Midwest Farming. We can see that Sam's account now has a zero balance, since he no longer owes money to the business. Of course, there is still that double entry to be made to accounts in the general ledger. We need to credit the accounts receivable to reduce the amount owed to the business. The debit entry will be made to sales returns to show that we have reduced the revenues from sales. Remember that a sales ledger requires entries to the account for the customer. It is not the double entry. It is the general ledger that requires the double entry in order to follow the rules for accounting. Computerized accounting programs do not show these easily, since the entries are made directly to customer accounts and the posting to the general ledger done when the entry is made. In other words, it is done in the background. This ends our session on the sales ledger. Thank you for watching and for listening.